And that means we are live here on YouTube for our Tackle Trading Halftime Report. We've got Coach Tim, Coach Noah, and Coach Cody here to break down the markets, break down the news, give you some ideas, give you some analysis, and hopefully have some fun while we're doing it. Cody, how you doing today, young man?
I'm doing quite well. Very happy with what the market's doing. This little pause gives me belief that we're going to see that pullback that all of our bullish expectations would like to see. That way we can possibly get another entry. So we'll
You
see if
know,
that happens.
Cody, you kind of run our YouTube channel actually, and you've been the producer of this show now for about a year and a half. What did you want people to know if they're here for the very first time watching this show? How do they get a hold of us each and every day and make sure they come back and see it?
Well, the number one thing I think people should know is that we probably put out some of the best content for free on YouTube. That if you are trying to learn how to trade and you're trying to figure out what's going on, make sure you're checking out our glossaries, all of our explanation videos. We put about 3 to 5 out a week. So you need to make sure you subscribe and click that bell to where anytime we put out a new video, you can go over there and watch it real quick. And from that, just share this video. Great content every day. If you want to learn even more and become a pro member, click on the link down in the description. With that, guys, let's start the show. What's going on?
All right. So do you get nervous when you have to pitch something? Is that what I just
No,
heard in your voice right there? A little trepidation.
I did
No,
have a little bit of
you ever,
a little scratch there, but normally I can pitch just fine.
Yeah, no, I got you, brother. I got you. All right, let's have some fun. S&P 500 holding the moving average here, riding the lightning the last month. That's a phrase I love to use when I'm talking about an uptrend like this. We are definitely holding that 9 EMA in a parabolic upward move. Red candle today, Noah, but 0.2%. Let's not get worked up yet. In fact, the whole week has been nothing. It's been a doji fest up here for the broad markets. Individual companies, there's a lot of news. Even today, news on Netflix and Apple and Google and Peloton and the weed stocks and all that. We'll get down to that in a minute. But what are you seeing in the broad market, Noah?
Well, just like you described, it is a doji fest. I like that. Those slow down up there at the 3,100 level. Market's been slowing down. Tops have been formulating in there. So if you break that down intraday, it basically means it was going from up to a little bit sideways. So if you drop that down into an intraday chart, you can just see the last couple of days have been chopping sideways, and you're seeing it maybe poke up to a new high here and there, but it's overall sideways in the context of that upward trend.
Mm-hmm.
So that means that the momentum slowed down and sentiment may shift. And when you see sell signals come in, it's not uncommon for a correction to see a little pullback here as profit taking occurs.
I would agree that, I'm looking at the market and trying to think, how would I, have to see something? What signals would I want to see to get more bullish, more bearish? Would a breakout and a close above 3,100 actually make you more bullish, or would it just kind of maintain your current market posture of like a +1?
Depends on how many more days we see the consolidation for. If I saw a couple, if I saw 1 or 2 more days of consolidation, then a breakout, I'd probably like that signal more, just because it's had more of a time correction. Mm-hmm. But either way, if it breaks 3,100, you can't ignore it. I just have more confidence if we saw a little bit more of a time correction before it did.
Yeah, I would agree with that. Move on to the Dow and the NASDAQ as well. Take a look at the broad markets, then we'll get into some individual companies, finish up with the Russell, and just kind of some quick analysis on the broad indexes. I don't see a lot of kind of detail that needs to be really analyzed unless you're seeing something I'm not. Same markets all week long, it feels like, but give me a run through on those 3 indexes.
Not as much of a doji fest and not as high up off of the old resistance, like the breakout on the Dow has not been as prolific, but it's just chugging along. And again, it's got a similar slowdown, just not quite the same. Wouldn't be surprised if we saw another retest back down to the old support resistance zone. As for the NASDAQ, nice energy on the breakout, nice pop, similar chart on the doji fest out there. So let me kind of zoom in on that. And again, you can kind of see the last couple of candlesticks just chopping sideways, a little bit of selling pressure as of today. And again, there's that 9-period moving average rising. And if we see a violation cross down below that and it breaks some of those lows, it's probably a quick trip down to that rising 20-period moving average. So
you kind of got a vacuum there, don't you? I mean, it's holding on to this trend and some intraday support on all the indexes. But if it broke down at all, probably a quick 1 or 2% back down, into old resistance or even the moving average zone.
Well, it would be the kind of textbook drop back I really like to buy the dip on. So the buy the dippers will really love that pullback. In the meantime, I'm sure there's lots of folks who've got their bullish trades working out well, and they're asking themselves, what should they take a profit or not? Trail those stops up.
Mm-hmm. Yeah. All right. Quick look at the Russell, if you will. Kind of same analysis from yesterday.
My condors are grateful for the doji fest going on out here.
Gotta love it.
It's really helping out. The downward drift on that little pullback into the rising moving average, longer shadows. This could be setting itself up for a breakout. So the condors I'm currently watching expired today. So I'm actually pretty thrilled about that. So, but other than that, that's a nice resistance zone. And if you see a shallow pullback, you might see a cup and handle form here and a potential breakout, so especially if the rest of the market's running.
Yeah. And a breakout obviously would be significant. We just haven't seen it. And we should not assume anything is ever going to happen until it does. When it does, then you react and take action. But that condor system's been great. It's been great. Well, quite frankly, it's been great for over a decade. Even when you have volatility, if you know what you're doing and you position size well, then you can run that system pretty much in any market condition, in my personal opinion. But it requires education, skill, and you must understand the risk behind it. I think the number one mistake traders make with theta, Noah, is they try to stack too much by putting all their eggs into one type of system. Like if you run your whole account on condors, then market breakout is going to hurt you. But if you only have a portion of your account on condors, then it's just another strategy in your overall portfolio design. Would you agree with that, by the way?
I do agree with that. And for years, I've told students, I'd rather see you doing one contract on 10 different stocks than 10 contracts on one stock, because it's a numbers game. You're playing a probabilities game. And if you put all your eggs into that one basket, you put too much of your portfolio into the one strategy, then if the strategy, because the systems like the condors and the credit spreads, invariably the stock price moves more than a standard deviation. You have some risk you need to manage.
Real quick, Cody, go ahead.
Oh, I was going to say, Noah, I absolutely love that. I remember quite a while ago now that one of our students in the lounge had asked that. He was like, I just want you to look at my portfolio and let me know what I'm doing, because this just seems too easy. He was like, I want to make sure I'm not just making a mistake or getting overconfident what was going on. But what it was he had probably 30 positions on, very analytical guy. And he was like, all I'm doing is if they start taking a loss, I exit the position and it hits my stop. And he was like, so I just keep my winning trades running and I exit my losing ones. He's like, is that all we have to do? And I'm like, yes, because he had a very diversified portfolio. So all he was doing was managing those trades, removing losers, letting runners win.
Yep. And when you're doing those credit spread systems, again, if you don't over position size, the losses don't get too large and you're still playing that numbers game. It's that, probabilities and standard deviations. The market's going to move at some point in time, but not on every stock at the same time. So it's a good way to approach it.
If you're stacking theta and you've got 30 trades on and you're managing very, very well and you're following your rules on a position by position basis, in some markets, it can feel that easy, Cody. But if the market starts going crazy, learning how to hedge against that delta is also very, very important. So I'd have to look at that student's portfolio, but the mindset is 100%. I've been teaching this for a long time, Cody. And one of the mindsets I tried to really implant in people is that you're a gardener. When you go into your account, pull the weeds and grow the vegetables. You want to get rid of the problems quickly and let the trades that are working well be very patient with profits and be very quick to get rid of a loser. You got no time for losers, Noah. There's no doubt about it. You got to stay around the winners, right?
Yep, exactly. No time for losers.
That's right. Some individual stocks that we got to look at today, some of which
are
like
a bunch of preppy kids in high school.
Honestly, my head went to like Queen lyrics, like "No time for losers, we are the champions of the world." Something like that.
That's an 80s kid right there. I like it. First of all, is that the greatest Queen song of all time? Or is Bohemian Rhapsody still the greatest?
They're all great.
Or Fat Bottom Girls. I'm a big fan of Fat Bottom Girls.
I just want to ride my bicycle. There's so many good choices there.
I might have to kick on some Queen here after the show. No doubt about it. Gonna have some fun listening to tunes in the office today. Some stocks we have to analyze. Walmart number one. Bring it up. We'll get into commodities, currency, the dollar, all that kind of stuff. Walmart came out and beat expectations. They raised guidance. They had a great report. Everything was clear sailing. It looked like it wanted to run. It gapped out a little bit here, Noah, but it has backfilled the entire way. Pretty complex candlestick on an earnings gap. Break that one down for me.
Well, I'll tell you what this reminds me of, Tim. This is spiking the football. That's all that is. It gapped up, and everybody who owned it just said woohoo and sold. Some day traders, no doubt, probably sold that into the gap. But this is the kind of thing where again, the numbers and the outcome are good. Watch for the dust to settle. Watch for a buy setup to form, because they definitely had a nice reaction to it. But profit taking, you can't be surprised when a company like Walmart finally does a big pop up and you see people sell off. So last time they had earnings gapped up, it didn't quite fill the gap. You saw plenty of selling pressure. Here it was a really nice gap up, a lot of points, and I'm not surprised to see people take the money and run.
I agree with that. Is this an entry point if you were waiting for the earnings to subside? Does that candle throw you off, or are you comfortable with the price action if you get intraday confirmation?
Well, first thing I would do, Tim, is I'd go read the earnings report, make sure I understood their guidance. If the numbers were as good as they look, and they also have a nice forward-looking guidance, I think that if the price does settle in here, you see a couple green candles kick in and then some upward movement, that's your buy signal. But, it would need to let the dust settle, because that is a hard sell off, and that's got a lot of downward momentum to it. And so, you take that down into a smaller time frame, like an hourly chart or a 15-minute chart, and watch for the pattern to normalize, watch for the price action to settle down, and then look for your breakout.
Yeah, I like it. Walmart, I actually read a report. They're just beating the pants off Amazon right now, and Amazon, they actually just cut some cost on delivery cost on high-end ticket items and things like that. Walmart is doing great things in their retail model as well as their online model. There's no question. Brick and mortar is doing well. Online's doing well. I read some of the report. I'm with you. There's no rush here. That candle does not make me want to hurry and just buy. There's nothing there for that, but I'm going to keep this firmly implanted on a long-term bull watch list. And I think it's really good for conservative investors who are looking for a company in this kind of space. Still continue to be a leader. There's no doubt about it. Viacom, VIA, if you'll bring this one up, and we'll talk, or VIAB, either one, either the A shares, the B shares are good for me.
Shares, yeah.
Charts look the same. They actually announced a deal with Netflix that they're going to start streaming some of the Nickelodeon content. Obviously, Disney Plus has got that industry shaken at the core right now because of how many subscribers are jumping into Disney. We'll get into Disney. Viacom chart, there's nothing to see here. They had their earnings report. Earnings was mixed. But that content deal with Netflix, bring up the Netflix chart and then finish on Disney. We'll have a conversation about all of it. Netflix, I don't know, can the Nickelodeon content be enough to compete with Disney Plus? Chart is starting to show some reversal signals here, Noah. What would have to happen with Netflix for you to get interested?
Well, I saw somebody breaking down the math earlier about the number of subscribers they've increased and how much their market cap's at, and how many years it's going to take for those subscribers to actually cover the difference in the market cap. I think they've got, they've got the content. The more content they have, the better, but it's going to come down to the cost of the content. See, Disney already has a lot of the content and they own it, whereas Netflix is going to have to, pay other people for it unless they're producing
something else. I don't know if y'all realize that Disney's doing a lot of the movies they keep showing previews for, like Lady and the Tramp. It's not saying like out in theaters on this date. It says streaming on Disney Plus. They're going to start releasing movies just like Netflix has its original content where it doesn't even go to theaters. It just goes straight to their platform.
I'm going to put it off as long as I can, but I'm pretty sure I'll end up subscribing myself. But
dude, I will literally subscribe. If my wife has not already subscribed, I'm subscribing this weekend so I can binge watch that series on the Star Wars. Did you see this on Disney Plus?
I haven't.
Oh my gosh. And listen, Boba Fett, what do they call those guys?
Oh,
Cody?
yeah, the one about the bounty hunters.
Yeah, it's all about bounty hunters. And I'm a Star Wars geek. I love stuff like that. I might not like the end of this 9-episode, marathon that they've had, but
I'm a Star Wars geek. I may not like 6 out of their 9 movies, but I am a Star Wars geek.
That's exactly right. If you're not a true fan, or if you are a true fan, you do love and hate some of the content, right?
Yep. Some of them are better than others.
I agree with that.
It's good storytelling in general.
Dude, whether you subscribe or not, I'm going to tell you right now, 10 million people subscribe to Disney Plus in the first day. And Disney is now twice as big as Netflix. Netflix was that market darling for a long time, and now Disney's getting into the content game the last few years, doing a very, very good job of it. And boom, here we are, breakout run. Doji today. That chart is a hard one to swing trade here, but I still, even with this news about Nickelodeon and all that, don't you think Disney's still winning this fight, guys?
Oh yeah. Well, and when Netflix starts to open amusement parks and sell $20 churros, they'll probably have a few more cash, flow centers.
That's right. That's right. More companies in the news today here. Weed, Canopy Growth, WEED is the stock symbol, and or CGC, either one. I think it depends on if you trade them in Canada or not. Broke down on earnings, and it's dragging the rest of this space down. ACB, Tilray, Kronos, you name it. These pot stocks are now taking another leg down almost 16% here, Noah. I don't see anything but bearishness here. Where's the bottom?
Well, I'll tell you what, in the lounge this morning, we had a good conversation about this, and I did this unintentionally. I said, "Oh, they're getting smoked right now." And I didn't realize what a great pun it was. It was just, maybe subconscious there, but yeah, they're getting smoked.
They're coming down off their high.
They're coming down off their, they're getting beat down. They've got a lot of short interest on these. And the one thing I worry about there is a short squeeze. If you get a, percentage of the shorts covering, you see the stocks rally. And I think that, overall the chart's down, but at some point in time, these companies, if they are going to be viable, they will find their intrinsic value down there somewhere. So you can't be too greedy on those bears.
Maybe. I mean, here's the thing. They don't actually sell a lot of product. The actual revenue and profitability, I don't know where intrinsic value is. Bring up Tilray again. I'll give you some numbers. It's an interest. I agree with that at some levels. This is still a $2 billion company. And people might be thinking, well, it's only $2 billion. It must be cheap. It used to be literally 20 times or 10 times the size. It was at 20 billion at one point market cap when it was a $200 stock last year, Noah. Their sales, 90 million in sales. So even on a $2 billion company, they only sell $94 million in product. It's not a good, price to sales ratio. PS ratio is 20. I get it. The PE ratio, I'm not even seeing a PE measure because they haven't earned any money. They're still losing money quarter over quarter. So I don't know where intrinsic value is on these companies. I think the market, very rightfully so, is having a very, very hard time pricing these, Cody. And while they're in a downtrend, keep it simple. If you're a holder of weed stocks, I would have to be very open-minded and listen to an argument. Cody, could you make an argument to buy any of these?
Nope.
Noah?
Nope. I will make an argument to short them.
My argument's not to buy them. My argument is if you're shorting them, take your profits. That's my argument.
Yeah, a lot of them. Yeah, go ahead.
Well, that. The trend, you can't deny the trend. The chart setups are pretty. The breakdown pattern's clean. So you got to like that. Options are probably not the best, and whether or not they're short sellable would be the question on all of them. How easy to borrow are they?
More companies in the news here today. Cisco, one of the biggest companies out there that is reporting earnings this week. They are, down today and gapping down below support, and some very, very interesting chart opportunities here, Noah. When you gap below major support that you've established for the whole year, obviously a momentum play is in line here. Now, gap fills are very interesting, but it creates an opportunity where you can play this bar by bar.
Yep.
It would be very, very aggressive, but something on the bear side with a stop loss above today's candlestick does have some logic to it for me. I've not pulled the trigger yet. I'm just looking at this, but give me a read on that chart.
Well, we were talking about this in the lounge this morning, and I agree with the nice setup, breakdown below key support level, good downward momentum. I would treat this like I treat just about every gapping stock. I always watch for that first day for it to establish the intraday high and the intraday low. And I'll break that down into an intraday time frame and say, okay, well, hey, it's established the high at 46 and it's established the low down there at 44.63. If it takes out the low, you short, and then you use the trail stop management. Like you say, trade it bar by bar. If it comes back up and takes out the 46 high, then there's a good chance it might fill the gap. So because gaps commonly fill and sometimes they run, I would wait for it to take out the pivoted established here intraday. So pivot high, pivot low, trade the direction it runs.
Hmm. Yeah, I'm with you there. I think it at minimum goes on a bear watch list for me, and kind of wait and see if I want to do something with it. I'll probably wait till the bell. I want to see the price action for the next couple of hours, 2, 3 hours, and see how things settle out throughout the day. And if I miss it, I miss it. There's always going to be another opportunity down the road. With Cisco here, though, that is not a good gap. So you've got to instantly put it on a bear watch list if you have not yet. Other companies in the news, Kraft Heinz, they got downgraded by Goldman Sachs. And GS came out and said, hey, you know what? KHC, if you will.
KHC. Oh,
They
that's right. They
combined.
got that. Yeah, they combined.
They combined those two companies a bit ago. Reversal characteristics on the chart here, Noah. In fact, I was kind of interested in some potential breakouts if we did catch it. Dividend paying company, consumer company, and lots of upside if you broke out of that resistance. But now this downgrade kind of throws that whole chart into question, don't you think?
Well, yeah, it does. But again, I mean, a $30 stock paying a 40-cent dividend, that's not a bad dividend price range. And again, it's been pretty sideways for the last 6 months. Just chopping sideways, not much different today. It's only a little bit lower than it was after it gapped back off of their negative news. So you're right about the downgrade, causing some problems, but otherwise I do see the reversal pattern setting up as well. This is one I've had on my radar for boomerang trade. And again, because it pays such a nice dividend, and I think what product they sell over time is not going away.
Yeah.
So I think that they'll get themselves sorted out. But if they're downgrading it, that could be signs of short-term troubles ahead.
Cody, I just remembered it's like Relationship Thursday.
Yes.
So we could be talking about longer term ideas and what you're going to do with this. Warren Buffett is famously a holder of Kraft Heinz. Is that something that if you own it for the dividend and for the potential of it coming back, that you would continue to try to work through that relationship here, Noah, and be a continued holder of the company? Let's say you've held the Kraft Heinz for 20 years. Do you continue to hold?
That's a tough question. Depends on how many shares and how much that dividend is. If I'm Warren Buffett and they're paying me over a 1% dividend, sure, I'll hold. It also depends on what his cost base is.
Yeah.
Looking at the chart, doesn't look that strong. But, I think over time, I don't know. I'd have to go study their numbers. I know that they've got some issues on their books, but it's got a decent little diversification of products and their staples. So
Yeah.
I think if you're looking for an opportunity to buy something on the cheap, this might be it. And I don't know if you're at the bottom yet, mind you, but this is the kind of stock you could do with that cost basing, cost averaging, build in a base, collect the dividend, hold it long term, and use it in the retirement portfolio.
Okay. I've got a would you rather here for you, Cody. I want to hear your ideas. Google is going into a business deal with Citigroup. Give me a chart on Google and Citi real quick here, Noah. Quick analysis on both. And then Apple is going into a business deal with Goldman Sachs. If you had to buy both in tandem, either both Google and Citi or Apple and Goldman Sachs with the same amount of capital, Cody, I want you to look at these charts and think about it, because obviously tech is going into relationships with financial services. Which deal do you like better? Which of the two companies do you think has the better potential? Beautiful chart on Google. Interesting ideas here. Noah, break them all down then. Cody, I want to hear your thoughts.
My thoughts are Noah's. Who's starting?
Go Noah first. To give me a quick analysis on the charts.
So it was Google and Citi and Apple and
Goldman Sachs.
Goldman Sachs.
Mm-hmm.
Between the two, just from the just the sound of it, I would probably think more people trust Apple and Goldman Sachs. I don't know. I think my knee-jerk reaction to Google getting into that same business, although the difference is probably nominal, I don't trust Google. Maybe that's just the conspiracy theorist in me. I don't know. But chart setup's beautiful. Nice breakout pullback. I mean, textbook little pullback into a support zone with a buy signal. So you can't argue with that chart. Apple's, technically a little bit overbought, but I would probably be more likely to use Apple Pay, but then I'm kind of an Apple guy. So
interesting. Cody?
So I actually understand Noah's argument when it comes to Apple, because I do agree with that I probably trust Apple more than I trust Google. But when it comes to, Goldman Sachs, Citi, to me, it's, apples to apples. They're both banks. They're both large banks. They're both have done evil things in the past. So that doesn't necessarily matter to me. But when I really think about it, it's like, okay, which one could be, as a consumer, doesn't really matter. As an investor, I think I would actually go with the Google Citi over Apple Goldman Sachs. And the reason why is Google's going to be able to put that advertisement out for their own card as much as they want.
And Steven has a good point here. In the Me Too era, Google and Citi makes more sense since the Goldman Sachs algorithm was labeled sexist yesterday.
You have no idea how outraged I am over that.
If you have not heard the story, go and Google it and see how it comes out, because I'm not touching that
Well,
one.
if you Google it, won't it guarantee you get really negative press?
Yes,
Just throwing that out there.
if you Googled bad press on another, yes, that's my point. Is that Google controlling the advertising, the AdSense? Like, I'll tell you, Google on this, when they launch that card, they're gonna be pumping that thing constantly.
You know, I understand why they want to go into financial services, and it does make sense, but doesn't it always feel like one of these companies moves into an area and then they all kind of pile in and to see if it works? You know, it reminds me of when Google went Google Plus and tried to launch social media, and how much money did they waste there? Google doesn't feel like a consumer product type of company. Apple does. I love the argument you guys just made, because to me, Apple Computer, we're used to buying stuff on our iPhone. We're used to using our cards on our iPhone. We're used to that. It's a natural transition, and it does make more sense to me in that regard. We'll see how it shakes out. Both companies are very, very bullish right now.
And I think Apple's got a better
use,
track record with data, like with their treatment of your data. You're not for sale as much as you are. Not that I trust either of them, but you know.
And you guys both use Google Chrome?
I do.
Do either of y'all have y'all's credit cards saved on the Google Chrome thing, to where whenever you're purchasing anything, Google will fill it in for you? It's gonna be very easy for them to just say, "Hey, you have a card with us. Let's use this one."
Listen,
for
I
anything
get it.
you buy online.
I get
like,
it.
hey, you have a card.
Amazon, you know, it's all there.
But every time they do this kind of thing, doesn't it raise scrutiny and oversight from politicians and policymakers about antitrust again? I mean, they can't be in every business. You know, at some point, people are going to say, enough, Google, you can't run our entire life. Right, Noah?
Exactly. Well, maybe, I don't know. Trust busting should be something we do, but
all I know is it's crazy that I remember a study, and I got to find it, that Google can predict when and what type of flu is coming out based off of search results as it starts getting the flu season.
Oh yeah,
they can overlay when certain diseases are breaking out, what areas, based on search results coming out of those cities. It's a crazy thing that they can do.
Oh, they're an innovative company, and thank God for capitalism, because the type of value both of these companies are brought to our society and modern life in 2019 is incredible. There's no doubt about it. I'm just not sure I want my banking with my email provider. I don't know. We'll figure it out.
You know, after I buy a product or I search for anything online, the ad feeds show up in my Facebook, feeds. I mean, it's crazy how tuned into they are to our buying and habits and things.
You know what I think that they really should figure out? I mean, they're smart enough to be able to throw these ads in front of us. After you've already purchased the thing, you keep seeing ads for 2 months. It's like, dude, go away. It's like, I bought this a long time ago.
Mm-hmm. Yeah.
Eventually, they're going to know that and be like, hey, you bought that. It's like, what about the accessory to it? You just bought a computer. Yeah. You just bought a computer. Do you want a headset to go with that? Do you want a nice carrying case?
Oh, c'est la vie. We'll have to throw this one out there to the team here. Google or Apple long-term into financial services. Interesting news. Give me the dollar, crude, and gold, Noah, real quick.
Real quick, before we move off of that, what I do think is completely stupid is in their ad, it says, money provided by a company, not a bank. And then it shows the card flip and it says Goldman Sachs on the back. I'm like, that's a straight up lie in the middle of your commercial. Because you're not member FDIC, so you can't lend money unless you have a bank affiliated with you. But Apple's trying to say backed by a company, not a bank. It's like, you're lying to the public.
Well, they didn't tell you which division of Goldman Sachs they're sponsored by.
Well, in order to loan money out, you have to be FDIC.
Correct. Yeah. Listen, I mean, obviously they're getting into the banking sector, and I haven't seen the ad, but I'll have to check that one out, Cody, and see if I have the same scrutiny.
It's cash flow for companies is what credit cards are. It's their cash flow.
Yeah. No, I get it. And they're sitting on cash. I mean, by the way, I understand why Apple would want to go into banking at some level. They got 250 billion in cash. They're not doing anything with it. They can secure that. There's a lot of layers to this that makes sense on the Apple side. I'm still trying to noodle through the Google side, so for right now, I think Apple's actually looking a little better from that regard.
Well, I think they should just cut to the chase and create their own cryptocurrency.
Well, that's Facebook. So you're a different animal. Quickly, dollar, crude oil, gold. Give me a rundown on currencies, commodities.
All right. So dollar, let's start out with the dollar. You got that same pattern we were looking at yesterday, little inside consolidation in the middle of the support resistance range. So, that's in that support resistance neighborhood and slowing down. We're overall in that general upward drift, on the overall trend channel. But that just leaves me as, cautiously bullish to neutral. So neutral to bullish
right now.
Well, yeah, well, I mean, it's high basing. I don't know if you're high basing or just stagnating there in the middle, but I see it ping ponging between 98 and 99 in the near future.
Yep.
So dollar, again, if they're not going to be cutting rates, that probably bodes well for the dollar overall long term. Take a look at gold. And hey, 3 days up. There you go. After a hard sell off like that, I watch for a double bottom.
Mm-hmm.
So I don't know that I trust this first rally because it's got a lot of congestion overhead, and usually I see it, come do a little small kiss, come back down, and we'll watch for another bottom there.
Yeah, that chart's not out of the woods yet by any stretch of the imagination. I mean, we're bouncing off the bottom, and if you're a gold holder, you like any kind of upward movement, but you've got old resistance, old support that will be new resistance. 1500 is a psychological level, and you've got falling moving averages on the daily chart still. Now, weekly looks good. Same argument on position trading investing. I think gold has kind of cemented itself right there. You got to like the stop of the bleeding. You didn't want to see red candle if you're a bull holder, but very cautious on this gold rally, don't you think, Noah?
Yeah, I don't trust this first rally. I'm not buying into it. I think it'll run up into this congestion over here and probably sell off again.
Mm-hmm.
But catch it on a second dip, and a little bit deeper into that 1450 zone, maybe that rising 200. I think it's a stronger buy opportunity down here.
Ding, 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 ding. I'm with you. And then last one, two actually here, then we'll get into our relationship advice here today. Crude oil and natural gas. And by the way, while we analyze crude oil and natural gas, I want everybody who's watching right now to think about one investment, one company, one ETF, one area that you are currently in a longer term relationship with. Maybe you're tied into it because you've been buying it for a long time. Maybe you have some company stock. Maybe it's just one on your watch list you're interested in. And we'll ask you for those symbols here in just a minute.
Baseball cards.
Yeah, sell the baseball cards. Sell the pogs. Yeah. Get rid of the board games, right? Buy something that actually is going to hold value forever. I was talking to a guy, and I get it. I love baseball cards. A short tangent. I was talking to a guy who's held his baseball card collection for like 30 years. And it used to be worth $100,000, Cody. Now it's worth about $4,000, So.
Well, and I think baseball's not the most popular sport. I think it's dying with a generation.
Yeah. Yeah.
Yep.
Well, that's a different debate, different discussion for another time. Crude oil neutral, nothing to see here. I saw inventories numbers came out, but that report has not even been a market mover, let alone a crude oil mover recently. But the one I'm interested in here, guys, natural gas. We talked about it yesterday. We've been talking about it more and more the last few months. Natural gas, little pivot, little upward movement here, Noah, little red doji. I'm not necessarily
the little commodity that could. I think I can. It can go up from here. Come on, you can do it. Everybody believes in you. It's an interesting price point, and this is the price point I was watching for, and I really wanted to see that upward, candle bounce. Would be nice to see a stronger close in today's price action.
Mm-hmm.
You see that 20 coming up to help push it?
Yeah.
That's what I'm watching. That 20 is coming up. It's saying, hey, I got you, bud. I'll help you out.
Give it a little boost. Yeah,
that's right.
It's probably there. And again, cold weather snap would probably help out.
Step system rules would have you potentially confirming tomorrow if you can close above the candlestick today. And that would be the conservative confirmation. If you've not studied the step system, And that is mandatory. If you're a pro member at Tackle Trading, finish the step system. No excuses, button the seat, put the time in, and get your rules designed to make sure you understand technical entry. Now, how you play it here, I mean, that's up to the trader based on mechanics and their portfolio design. I like a bull put spread. That would be the way I would approach it. But I'm a theta trader. And in this market condition, as we're going into the holiday season, Noah, theta is what I'm focusing on personally. But there's obviously delta opportunities there as well. Let's get into our game here, Cody. Set it up. This is one that's kind of naturally evolved over time. I really like it. It's an offshoot of what we do on Tuesday, which is our rapid fire section. We're doing, what is it called? Marriage counseling?
Yeah, we'll call it marriage counseling. So this is a versus the rapid fire where you're looking for a stock that you just want a quick analysis on. You're just looking to trade something. You want to know what the coach's opinion are on trading that stock. Today is more of the longer term relationship. This is a company that you've either been in a relationship with or you're looking to get into a relationship with, and something that you're looking fundamentally to hold long term, based on the chart, based on the pattern, based on what's going on. Does it have a dividend? Is it a relationship that you want to stay in or get in? So if you have a stock like that, some type of signal that you want a longer term play on, then make sure that you put that in the chat right now. And we're going to start working through those as soon as we get some in. Looks like our first one we have is WPM, because I was before that just saying no problem, not NP.
Yeah.
Is there a ticker NP?
WPM.
Ooh.
Oh, there is a ticker NP. NIHA.
Precious metals, silver company out of Canada. Let me give you some numbers here, Noah, and then I'll get your take on this. They have not been buying back shares this year. In fact, they've been increasing the shares on the market for the last few years, issuing more out there. Sales have dropped for 2 years in a row. 2016, they had a high water mark, and then 2017 and 18, they dropped a little bit, but the EPS has been going up. So efficiency in 2018 was strong. Looking at a PE ratio that is not being listed, probably a negative PE somewhere on that list, I'm guessing. Decent fundamentals, I would say at best. Size of the company, they're a $12 billion company. So wheat and precious metals earnings coming up should not affect a longer term relationship. Bit of analysis. Noah, what say you here?
Well, from a technical perspective, you've got a nice support resistance zone on it. Fundamental perspective, but I have to dig into the fundamentals a little bit
I
more.
feel like we should have weekly candles for relationship.
Really
Thursday.
probably should for relationship Thursday. It's got a decent uptrend, and I think the demand for precious metals will stay high in the meantime. So my relationship advice is, as long as you see a general demand in silver and gold and other precious metals, watch those precious metal indexes. You probably have something you can hold here.
Yeah. Very good. Next.
BP.
Evan BP. Well, it's an ADR here. We're looking at international pricing, a lot of gapping. Chart, Noah, not great, I think is the best way you could say it. Neutral at best. Would you agree with that?
I would say that. Probably the best thing going for this is the dividend.
Mm-hmm.
So it's got a decent dividend for the price of the stock.
6% dividend. Yeah. So, I mean, they pay you $240 over the course of the year, $40. So about 6% just on the dividend alone. That is going to make it attractive. There's no doubt about it.
You can put up with a lot of crap if they're paying you that kind of dividend.
And
yeah.
Of course, obviously BP being a oil and gas based company, that's exactly what this chart looks like. It just reflects what oil's doing. So as long as you know what oil's doing and you want to pick up that dividend off of BP, I see no problem.
Plus an employee discount. How can you lose?
Yeah, for sure. Right. Like we've never seen that not work out.
Yeah.
Oh, I'll tell you, I mean, I'm interested. I mean, dividend payer, probably. Covered call, not so sure. I'm not sure the liquidity would work out here. Click the trade tab. Look at the option chain.
And actually, it looks like our next one's going to be Exxon, which is going to fall into the similar boat.
Options are great.
Liquid. Yeah,
options are great. Yeah.
That to me, and if you've got good options, that means you can use the options to protect you. That's great.
This one's a steady relationship. You've had a good marriage for 30 years. You've raised your kids and you still have a good time with each other. I don't think you're breaking up here at any time soon. They pay you a nice dividend. They're consistent. They're steady Eddie, all that kind of stuff. Chart's not great, but I like it. Next one, Cody.
Exxon Mobil. XOM.
Oh, if you're holding BP, aren't you holding Exxon too?
God, I can't imagine if you went into a relationship with Exxon, you're probably not selling anytime soon. I mean, you're at the bottom of the chart from a long-term perspective, one of the biggest oil companies, if not the biggest publicly traded one in the world. I know Aramco's bigger, but down here on the bottom, sitting on support, oil has held its range. I don't see a reason to break up with Exxon Mobil here if you're a long-term investor.
Yeah,
No,
absolutely.
I actually think this could be a good place to, if you want to be a long-term investor here, I think that maybe selling some naked puts down at a price level that you want to actually add more to could be a good opportunity here.
ExxonMobil, the PE ratio is 20, which is a little higher than you would think. Actually, that's lower than some tech firms, but energy usually doesn't carry PE ratios that are extreme. They're still a juggernaut, guys. I mean, their sales are improving the last 4 years in a row. I know they had a high watermark in 2014 when oil prices were up at that higher point that they were. Here we are. I don't think there's any reason to get rid of it. The one thing I would ask, though, is if you break below 65, do you hedge? Do you do something about that? Because that is a major long-term support.
I think you do. I think you would,
Yes.
Maybe roll calls down in the money, buy a protected put if you felt necessary. Try to pick up insurance on it if you'd like it. But otherwise, I think your downside risk is limited. It's not the type of stock that you just, drop 30% overnight. It can go down, but you can hedge it. And the options are certainly liquid enough to do that.
Very good. Next.
Next we have that's BP again, so we're not going to do that. CNI,
Canadian National Railways.
Listen, if you've been riding the rail this long and it's been making you a lot of money, I don't see any reason to switch into an Uber transport or start taking planes. It's treated you well for a long time here. Railroad company's not the sexiest, obviously, but this one's been looking real good, especially when you add the dividend in, longer term trend in. It needs to break the high to take this relationship to the next level. Would you agree with that, Cody?
It does. And then I think
would.
Yeah, and then the options need a little bit more liquidity. Maybe some more options on the weeklies would be helpful, but it's solid.
Actually, go down to the daily on this one because we're starting to see a cup and handle pattern form right now on the daily chart. We're seeing the handle portion of that start to form. So look at that, and then the 95 is your clear level to break to get into. So we get that cup and handle pattern with the 95 break. Perfect entry point there.
Very good. Next.
What are we on next?
Roku.
We've been talking. Tim and I were talking about this before the show.
This is
from
that
from a weekly
shiny
chart. I'm getting more confidence in it now. We talked about this yesterday on the daily chart, and I like the breakout above here.
Listen, this is the kind of relationship that if you're in it, you might come home one day and your house was set on fire. They might throw a fit. They might take your car, steal your money, and run away from you. There's no doubt about it. This is a volatile, risky relationship, Cody. I don't think there's any debate there, but you go ahead, make your point.
Well, and there's
this is like those Cabbage Patch. These is like those Cabbage Patch Kids commercials. The ones that are like, first they're sour, then they're sweet.
I'm concerned. I scratch my head every day about Roku. And I don't trade Roku. I just watch it. I'm fascinated. I still have not pulled the trigger on a Roku trade in some time.
You see, Tim, if you go with the crazy hot scale right here and you just draw that line up, it kind of falls on which side of the crazy hot scale it's on. So if it's, up here, it's crazy hot. That's great. But if it falls below that mean, you gotta get out.
$16 billion market cap, 900 million in sales. Sales are improving year over year. 15, 16, 17, and 18 and 19 sales have been going up. Market exposure, brand awareness. I mean, it's getting better. I mean, it's not just the kids anymore that know what a Roku is and that want to use it. They make a great TV from what I understand, Cody. I was actually looking on their website today. I'm interested in the product. I'm interested in the company. It's one of those high PE stocks that don't actually have proven earnings yet. I mean, you look at the negative numbers down there on those telephones.
They're still a debt-driven company. So
they're a debt-driven company. Yeah.
They need to overcome the debt-driven company, become just a profitable company in their own right, which is it's very possible they could do that. But do they do that this year? They do that next year? Do they do that in 5 years?
Couple more here. Yeah, I'm with you. And who knows? I mean, they have a path to profitability. Sales are improving, Cody. So there's a trend here. If you're an investor, you believe in it, obviously. So you're probably not breaking up with it if you're already in a relationship. Stone, STNE. Next one. You guys know this company, yes?
Which one are we on?
STNE.
I think Noah was texting.
I might have been. It's happened. My daughter wants a ride home from school.
Well,
So
that's a very important thing to do.
yeah.
First of all, I love that part of being an entrepreneur and being a trader from home is that you can go pick up your kids from school. You know, I did it every day this week. I went and picked up the kids from school and just chatted with them in the car on the way home. I mean, God,
I just think, she's just being needy. She wants a ride home.
Well, you know, it's our quality time we try to spend together. It works.
I'm making a joke, but yeah, it's definitely good quality time.
Yeah.
I wish I could work from home.
Stone is this company that Warren Buffett came out and said he was interested in earlier in the year, took a small position, I believe. That's when it shot up and took off. It came back after their post earnings in March. It's been on my watch list all year long. If you're going into a relationship with this company, you're probably holding, is what I'm guessing. If I remember right, and I got to look up some of the numbers here, but Noah, read that chart real quick.
Well, it's a nice, pretty ascending triangle. Sure do wish it had a dividend, but it's a nice ascending triangle, pretty steady uptrend. Some overhead resistance.
3850.
Yeah.
That's your magic number.
That's your magic number for the breakout. Yeah.
Dude, this one's a dirty, sexy money candidate for next year. I'd almost guarantee it. And I'll tell you why. Check the option chain real quick. Look at the cover call numbers on this kind of stock. Now, not weekly, so that does kind of damper it a little bit, but liquidity, you know, there's 500 open interest on $36 on a 40 delta. You can pick up 215. I mean, guys, you're talking about 6-7% ROI on a cover call.
I don't know what I just did there.
You have my attention.
Right?
Yes, you have my attention. Wow.
There's premium. There's premium there.
Yeah.
This would be an interesting candidate for your boomerang all the way around.
I agree. In fact, even boomerang there, you could boomerang the 30 strike price put. There's 1,200 volume today on that strike. Sell it for 70 or 75 cents. 1,900 open interest. If you have to buy the stock at 30, you're getting a 20% discount. It's an aggressive stock. This is one of those where you got to work on the relationship every day. You know, you've got to make sure that you're communicating and talking and managing all those expectations, but definitely worth it. The upside here is pretty strong in my personal opinion. Volatility and risk, obviously, when you're dealing with a newer company, application software. And here's probably the one risk that I'd have to wrap my head around. It's a Brazilian company. So
it's a Brazilian company. Go long.
Go long.
Yeah,
That's our general advice, right?
That's right. All right, maybe one more. I know we're not going to get to all of them, but how about one more here? I love this segment. Tesla.
Whew.
God.
Sure does move fast.
All right, relationship advice for somebody who's married to a crazy person. So how do you like how do you I learned this a long time ago in my life advice here. Don't ever talk bad about somebody else's spouse. So if you love Elon Musk and you're already in a relationship,
what I was going to say is this is one of those, honey, if we're going to keep dating, I need you to get rid of that crazy friend of yours because I can't handle that other person. You're okay, but you got to get rid of that crazy one over there. And that's Elon right now. If they could get Elon to step down and stop, manipulating it by tweets and stuff, his lawyers, I believe, have to look at any tweets that he's talking about his own company at before he's allowed to post them.
Well, maybe if they used a little lithium in the batteries, it would stabilize its personality, but they don't.
Hey, I see
nickel
there.
Yeah, see what I did? All right.
For those of you who don't know, lithium is used to treat mental disorders.
Yeah.
Bipolar. That's what it'd be for. And this is a little bipolar. It's certainly got the personality. But you know what? I do believe they're innovators, and I know that they're a very debt-driven company, but long term, I think they'll be successful still. So it's a high risk, high reward scenario. You have to be at peace with the risk.
All right, let me make the best case for Tesla that I can and try to see it through rose-colored glasses and maybe even make a positive case here. Their sales numbers have been going up for 5 years in a row. Okay. And they actually have a really good trajectory and trend in sales themselves. EPS have been negative, factory orders, expectations, investor confidence in Elon Musk, I think, is probably lower Well, maybe not lower than it was last year when he was smoking pot on the Joe Rogan podcast and acting like a lunatic, but it's not as high as it was 5 or 10 years ago. The guy used to be thought of firmly as a genius that's going to change the world. And now there's a debate there. Short float on the company, Noah, 26%. 26% of the shares are short. Now, if you think about that, that means there's a lot of billion-dollar bets against the company. But I will say this, it used to be 36%. Okay. The short interest and the short float was much, much higher even a year ago. So you're getting some short covering here this year. People who were betting against this relationship lasting between Elon and his investors in the market, they're now pulling those bets off and saying maybe they can make it work. It's like your two friends that you don't think are going to last, Cody. And then they just end up married for like 45 years and have a bunch of kids. You know, you never know. You never know.
I don't have any of those. I have a few that, didn't think they were going to last. And, 4 or 5 years later, they're starting to get divorced. And it's like, you last for a little while.
Yeah. This one is definitely a I don't have relationship advice camp for me. I have no idea. I am staying away from Tesla here, Noah. Just the complexity and the fundamentals, the complexity in the chart.
I'm telling you, I would have a long-term relationship if she got rid of her crazy friend.
But the crazy
what's her
friend,
crazy friend? Solar's, what's the solar
crazy
name?
friend is Elon.
Oh, yeah.
But the crazy friend is the one who keeps, borrowing money from her rich dad, which is all the financing that Elon can go out and get. I don't know, dude. I'm telling you, this is a complex one. It's the biggest fight in the market. Every weekend when I teach my webinars and my seminars, and when I'm out there for legacy, somebody loves Tesla and somebody thinks they're out of their mind. It's a big debate out there by investors, Noah. So I don't know. I really don't know on this one.
It's a tough one. That's why I say it's high risk, high reward. You invest the money you don't mind losing.
Quick look. I'm talking like 10 seconds on each one on the rest of the symbols I want to look at. Freeport-McMoRan, copper and gold. Good dividend paying company, finding a bottom here, very sensitive to copper prices. If you've been in a relationship long-term, you're probably not going anywhere. Taiwan Semiconductor, TSM. By the way, I love the W pattern on copper down there on the long-term chart. Now, this one, it's been riding the lightning, had a great year, one of the best semiconductor stocks out there. It's not the one I trade the most. I like AMAT, Micron, and AMD a little bit more. But if this is the one you believe in because you believe in that, 5G, that they have the line on, then obviously still pretty good. Coca-Cola, KO. Now, dividend, consistent trend, steady Eddie. This is not one that you got to.
This is one you keep in the family. It's a family heirloom. You pass it down to your kids.
Triple D Lewis. And one more Halliburton after this one. This one, I'm not so sure. 3D Systems down here, been ugly for a long time. You're hoping for things to turn around. There's no doubt about it. But that's a relationship on hope right there. Maybe a breakout of 10, give you a little, upside there. And then
I divorced that one, or don't get into it.
Yeah, that one might be find a different partner there. Halliburton, HAL, last one. And the only question I'd have is who in the world would go into a relationship with the evil empire? Halliburton, one of those companies that I'm going to choose not to rant right now, Cody. But this one has complex political ties and all kinds of stuff. The way they make their money, I get it. I don't see anything here, Noah. They're better oil companies, don't you think?
Yeah, there's better oil companies with, I think, a less sordid past.
Yeah. But my man Tanner out there in Colorado, he works for Halliburton and they give him stock. And actually the numbers, if you look at it, let's try to make a good case for Tanner. Tanner, I know that you drive truck for that company.
Here's
and
what you do. If
well,
they're giving him stock and he's getting it because he worked for him, then sell calls on it and get the free cash flow.
Take cash flow, collect the dividend.
Tanner's saying, so you're saying there's a chance.
So you're saying there's a chance.
Absolutely. PE ratio at 15. Here's some good things. PE ratio at 15. Sales have been improving for 3 or 4 years in a row as the oil industry has kind of come back off the bottom in 2015. Income is strong and consistent. Sales are strong and consistent. They pay a 3.5% dividend. A little W pattern down there on the weekly. It's not a great chart, but I don't know. I mean, if you've worked for the company for a long time, I don't see you leaving it. Guys, that's our show. Fun show. Cody, that's always a fun show. I like that segment, by the way.
I do too, because we do a lot of, just short-term trades and day trades and things of that sort. And that's mainly what we teach, but really having that fundamental, I mean, it should be, 30-40% of your portfolio should be in some companies that you fundamentally believe in, that you're investing in, and then possibly cash flowing off of those companies. So I definitely think that adding the more fundamental segment of really holding some companies long term, I love it, the segment as well. And there are some that you just gotta, kick to the curb.
I had the opportunity to meet Ed DeCasso, who's in our show here today. And Ed, I saw your comment earlier. I just want to make a comment on it, and I appreciate it, by the way. I met Ed about a year and a month ago at the Hall of Fame event for Legacy when Beth Salamanca got her award in October of 2018. And Ed's a trader and investor from, Florida, and he's been through our programs. No, I think he took classes with you.
Yeah, you bet.
And he made this comment, and this is why we do this, Ed. This kind of stuff right here. I love these Team Tackle learning moments with each halftime report, Traders Lounge, masterminds, etc. that I attend. I get 1 inch closer. Great job, coaches. Man, I appreciate that, Ed. That means a lot to me. And Noah, that's kind of why we come together and we put this education out there, right?
Oh, absolutely. It is a game of inches, and it is incremental over time, the little aha moment you have. And it's always a struggle. It's not something like all of a sudden you master one day and you're perfect. Nope. It's just an ongoing process all the time.
Well, and the second you feel like you've mastered it, the market will humble you. So
well, it'll humble you or change its personality traits.
Yeah, that's right. That's right. All right, guys, if you've not clicked the thumbs up yet, do it before you leave. Give me a quick thumbs up. Get the analytics out there for YouTube, showing everybody else that it was a good show and that you enjoyed. If you're not subscribed to our channel, click on subscribe. Click the bell to make sure you show up each and every day live. Tomorrow, we have our coach's mailbag, and Breakout Frank is going to be joining us, Cody, I believe, on his Friday. That's when he comes in and joins us. If people want to post a question, just mention us on Twitter, or pop it in the clubhouse. We'll gather a couple for that mailbag section. And guys, that's it. Noah, you doing Cash Flow Club tonight?
I am.
Do you know what you want to teach?
Well, it's going to be awesome, whatever it is. I'll come up with something brilliant.
What would I want to learn if I'm an option seller right now?
Option seller right now? Probably,
market's at a high point, right?
Yeah, I'm thinking, I don't know, there's going to be good opportunities out there, I think, for naked puts.
Yeah, naked puts on commodities or stocks that you find at the bottom that you'd be willing to own to start a boomerang would be a good idea. I'd also be interested in bear call spreads. You've got the market up at a high point, and easily you could probably find some stocks that are range up as well. And I'm guessing a lot of traders out there have bullish delta. Whatever you decide on, I know it's going to be amazing. We do Theta Thursday in our Cash Flow Club. If you're a pro member, join us tonight. And we'll be back tomorrow. Peace out, guys. Great job today, Cody and Noah.